From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Welcome to the COB, all the stuff you need to know about the day in business and markets. I'm Kyle Rodder here, as always. Well, it has been always recently. Danny Akuye. Danny, a good start to the week, I think it's fair to say.
Yeah, it is a good start to the week. I'm looking at about almost 0.3% rise on the market, or 0.25% rise on the CBO 200, or is that the ASX 200? And yeah, it's interesting. So what I thought stood out, and I wish I had a very intelligent answer, but we've actually seen a strong rally in the real estate sector today, and it could be a case of the laggards catching up. And information technology quite firm, consumer discretionary quite firm, energy and materials lagging. We'll talk about China a little bit later on. And some of the other sectors, not really a lot happening there. But yeah, a great start in terms of another nice rise on the market.
Yeah, absolutely. So like you said, 0.26% for the ASX 200, 0.25 as you can see there on the CBO 200. But let's crack on to the three themes, shall we? And well, there's a few things to pick up on. First, I thought was just banking on the banks.
Yeah.
We had really strong results out of the US banks on Friday night. We did see financials pare back the gains, their gains throughout the session. It was a very strong start for our big banks before, I think closing 0.4% higher, but yeah, really exceeding expectations and maybe allaying some of the concerns about the impacts of that financial instability we saw in the US last month.
Well, I mean, just from what I could glean, having a look, was those big banks have really been huge beneficiaries of those regional problems, and that was as clear as day. The net interest income for those large banks, I think it was up 59% across the board for those three, so Wells Fargo, Citi and JP Morgan that reported. And you have to start to question after those results that beat in terms of earnings and revenue, and they haven't passed on all the rises in terms of interest rate rises onto their deposit base. I was just wondering, and I haven't seen anything to date, but you know, maybe there is more bad news down the track, because this certainly was a positive surprise, and you could see by the share price movements with the likes of JP Morgan and Citi being the two top performing stocks in the S&P 500 on Friday.
Yeah, it does raise a question, doesn't it? If the banks are in a strong position, and you know, if this means that perhaps there's consolidation going on, that the Fed can feel a little bit more comfortable with this financial stability mandate and focus back on inflation, which means that, well, maybe they'll feel more emboldened to obviously push higher with rate hikes. So obviously several layers of complexity there, but still good, and it did rub off on our banks today. In terms of the other themes that we were watching today, well, ASX 200, we already touched on that, but China, all eyes on it, mostly because of the data tomorrow, but it would seem some efforts from the PBOC today to pump a little bit of liquidity in its financial system, and provide a just extra touch of support for its financial markets.
Absolutely. From what I was looking at, we have had a fall in the iron ore futures. They were off about 2%, and that may account for some of the weakness that we're seeing in the materials stocks. But you're absolutely right, the PBOC has been pumping quite a lot of liquidity into China to try and help that recovery go forward. And listening to some of the experts that I've just had on, they are looking for probably an improvement in China's economic growth. And so we'll have to wait and see how those GDP numbers come out.
Yeah, and of course we'll get all the partials that come out once a month as well. Retail sales, fixed asset investment, the whole lot might be the story of the day tomorrow to follow. But we'll just get across the different sectors of the market very quickly. We already mentioned the banks having a reasonable session out there, broadly higher. Westpac more or less flat, we have to say, but ANZ up 1%, NAB up 0.88%, the Commonwealth Bank not far from $100 per share once again. Macquarie cracking through $180 per share as well. The minus two, as you noted, being the real kind of laggard in the market generally speaking, but it might actually be a bit of a gold story we can see there, because BHP, Rio, Fortescue all edging higher for the session, but some big losses sustained for the gold players. In fact, that's the next area of the market that I did want to look at. Newcrest, you can see there on your screen, down 2.3%. The broader gold space, however, let's get, there you go,
Yeah,
very,
some
very
profit taking very
broad-based
much
losses.
coming in there, and you saw that as well overnight on Friday, US time. The gold price moving down a bit, so and also strength in the US dollar. The Aussie dollar was very weak on Friday, so probably after such a strong performance that we've seen in the gold sector, some profit taking starting to come through in that sector.
Yeah, absolutely. It's an area that's very sensitive, as we know. We've spoken about extensively to interest rate expectations. We have had, I suppose, some marginal shifts now where May is almost a done deal for the Fed if you do look at futures markets. So that dynamic strengthening the US dollar slightly and also obviously boosting interest rate expectations. Never good for gold. But Danny, let's get to the stock of the day. And actually, you know what? I might get you to introduce this one because you were the host for the first time on the call today. They've never given me that gig, but I don't blame them for not trusting you with the illustrious franchise that is the call. But Danny, you took it, the stock of the day.
Yes, Bank of Queensland, and yeah, it was interesting. Two guests and two different views. One was that it was actually a buy and that it had probably been oversold, but you might have to wait a little bit because there is a lot of restructuring going on there. But interestingly enough, we have a new chairman, Warwick Negus, for those who recognise that name. He is quite a grand fromage out in the world of finance and investing, and then the other guest was a little bit more sanguine over Bank of Queensland. So I think, are we going to cross to
Yeah, we'll see what Daniel Ortiz and David Lane had to say about their views on Bank of Queensland.
What was a little bit disappointing in their result or their pre-announcement was the fact that their net interest margins were lower. So, their net interest margin, we're forecasting about 1.8%, which is compared to a number of the major banks, which are now over 2%. So that's a bit of a disappointment for them. Think that there is value in the stock, and those that are prepared to stay with it over the long term will be rewarded. But having said that, over the last 12 or 18 months, it's been an underperformer. And shareholders have been disappointed with the performance to date.
One of the positives, though, was that there was some concerns whether or not there might have actually been fines applied to BOQ due to their some of the non-financial risk measures, so investments in cybersecurity and AML and things like that. And fortunately, there wasn't any penalties. Perhaps if it was one of the big four, APRA would have reacted differently. But we thought that was a positive. But we're probably a little bit more negative overall in the stock. It actually has one of the most challenged funding structures out of all of our banks, certainly the highest cost funding structure. And for that reason alone, we're probably looking to exit potentially after the next dividend. We want to keep that dividend that they'll be coming up in the next report, but potentially looking to decrease our exposure after that. So likely more on the cautious side, even though it is cheap.
Okay, so Bank of Queensland will not be going to the investment committee. But Danny, the view today, obviously you were behind it once again, and it was on the banks.
It was on the banks, so just really providing a little bit of a summary, what happened over in the US and what we are looking for in terms of the Australian banks. Obviously, Bank of Queensland is going to have their official half-yearly result, but just in terms of where the concerns are out there for the Australian banks, and that will be very much the analysts looking at the net interest margins going forward, credit quality, provisioning for bad debts. There's also some competition there in the mortgage market. So I feel when you look at the US banks, those big banks have just done incredibly well off the regional ones. And as far as we can see, Bank of Queensland might be a special situation in terms of a regional bank, but clearly some weakness there, and it is a much cheaper stock in terms of its valuation. But I think probably with the upcoming banking results here in Australia, we will learn a lot more about the state of the Australian economy.
Yeah, without a doubt, it's going to be incredibly exciting, only a few weeks away now. But let's perhaps get to our guest for the COB today and get his view on the banks. Adam Dawes from Shaw & Partners joins us live via Skype. Dawesy, great to see you there. Thank you so much. Just your view, broadly speaking, on the banks right now, because they seem to catch a little bit of an uplift from those good results in the States. I mean, is there much to cheer about when it comes to our local banks?
Yeah, look, there's lots to cheer about, and certainly, the banks have been an interesting one going forward and coming through. Absolutely, Danielle's right as far as the net interest margin. You've got to be mindful of that, and CBA got a little bit of a whack from 110 down to sort of $92, opening at $100 today. But look, that net interest margin was probably as good as it was going to get as of last year, and then hence why the margin started to come back. Look, I don't mind an NAB at these levels. They've been taking a lot of small to medium enterprise businesses or SMEs. They've been definitely getting some market share there as well. And look, it's a tussle, really, isn't it, between the banks. The problem is that some of the banks at the moment have been so competitive that they're writing loans that aren't actually washing its own face, or in fact, it's not making money for them. So you have to be a little bit careful there. But, we've got the big four, but look, I don't even think we're talking about Macquarie, and Macquarie at $180, I think it's an absolute steal there. So you should definitely be looking at putting Macquarie into the portfolio. Bank of Queensland for me is a definite no. I don't like the regionals. They need to get a lot bigger to compete with the big four plus Macquarie. So I would stay clear of the regionals going forward. They're price takers, not price makers when they need to borrow cash. So it'll be interesting to see. But yeah, certainly NAB looks good for value-wise. CBA still looks a little bit expensive up here. But yeah, nice to catch a bit of a tailwind from the US overnight. Made our banks look pretty good today.
So Adam, it wouldn't be appropriate not to discuss property when we're discussing banks. And although it's slightly, it's not directly, well, it is property, it's the REITs today. They were really, really firm. And I was just wondering, do you think they were just doing a little bit of a catch up, given that they'd been so oversold off the back of all the concerns over US commercial property?
Yeah, absolutely. And it's really, I guess it's the rhetoric from the RBA last week also, as well as potentially the Fed, that they aren't going to be raising rates consistently all the way through this year. And potentially it's only going to be one or maybe two more rate rises that we might see for that, which then allows the REITs to start to get back on their feet as well. So, yeah, I think it's a lot to do with that rhetoric from the RBA saying that, look, for prices, interest rates, we can see the top of the hill, and potentially we might see some interest rate cuts coming through in Melbourne Cup Day or early next year as well. So yeah, it's good to see a bit of green on the screen for the REITs at the moment.
So just in terms of this kind of China story to start the week, I mean, it's sort of capturing our attention a little bit with some moves from policymakers, as well as obviously some moving and shaking when it comes to our miners, so influential in the overall market. I mean, are you still sort of waiting for signs that there's a little bit more to come from China in terms of growth, or at least intentions to boost growth before becoming, say, bullish on the miners? Or, I mean, how do you view that space in particular?
Yeah, so I think the Chinese rhetoric or the Chinese market, they've pivoted a little bit or changed their rhetoric a little bit, that it's not going to be such an infrastructure-led recovery. So in other words, not putting money into the buildings and apartments and things like that, which BHP, Rio and Fortescue definitely are benefiting from. The rhetoric has now changed to be more of a consumer-led recovery. And that consumer-led recovery is obviously that they are going to be boosting people's via tax or via stimulus for them to go out and spend more money inside of China or whatnot. Now that definitely lends itself to a Treasury wine estates, which will do well when that consumer-led recovery starts to happen. And we have started to see TWE just kicking up a little bit over the last couple of days on the potential that that might happen. There also talk about barley also taking the tariffs off on that. So, these are the kind of things that I think that you'll sort of need to look in the portfolio instead of the miners, potentially look at that consumer-led side of things. And certainly something like a TWE is in the box seat to take advantage of that. And Kyle, you and I, we love sitting down, opening a bottle of Grange together. So it's going to be good.
Well, we've certainly had a few good times, Adam and I, but got to ask an area of the market that hasn't had a great time today, but has had a good run up until recently, is just the gold plays. I mean, do you have much of I mean, it's sort of a divisive one sometimes whether you like gold or not, but I mean, do you have any of the gold miners that you have on your watch list, or even perhaps been talking to your clients about, having in their portfolios to get exposure to the run up in gold prices?
Yeah, look, it's great to see that the gold stocks are actually starting to move again. You know, it's been such a long time. We've all been calling gold, have to have 5% of your portfolio in gold. You have to do this. All of those kinds of things, I think, is really, really essential for everything. But it's great to see these gold plays starting to move. What I'm looking for is some of those undervalued plays that are in the market, because potentially there could be some merger and some takeovers that are going to happen with that. And I think some of those gold plays, one that we've covered here at Shaw's, Black Cat, BC8, is an interesting one. It's a smaller cap stock and it is certainly undervalued at the moment. But going to the big end of town, we know Newmont has a mine life of around 7 years, whereas Newcrest has got a mine life of over 20 years plus. So Newmont, Barrick, they need to continually now buy these companies or buy these businesses to keep the run of mine life going. And that's exactly why they're going for Newcrest. Certainly a little bit of profit taking in the gold sector today, which is totally understandable because gold was off around sort of $40 over the weekend. So that's a direct reaction to that. But I still feel that the gold price still has a long way to go to the upside, and I'm comfortable to keep buying the Northern Stars or the Evolutions of the world, but certainly Northern Star. But then look a tier down to some of those undervalued gold stocks, because I think there could be some more corporate activity happening in that space over the next 6 to 12 months.
Fantastic. Thank you so much, Adam. I think that's a great place to stop. All that glitters is gold. I've even, dare I say, got a Goldie shirt on today. So there you go. Anyway, lovely to chat. Thank you so much for joining us.
Thanks, guys. Have a great afternoon.
Adam Zawers from Shaw and Partners there. Okay, well, let's get on to what we'll be keeping an eye out on tonight. And I guess, that's tomorrow, I should say. My apologies. China's data dump, GDP, we've already spoken about it, going to be very significant. Waiting for signs of a stronger pulse out of that economy. And the RBA minutes too. We might get a little bit of light shed on, well, I guess what they may or may not do, perhaps, in May.
Yeah, absolutely. What I think is really interesting is, and it's only an observation, is housing prices in Sydney are starting to pick up again. So it will be interesting to see what the RBA is saying around, managing constantly this whole, tightrope with the amount of debt that Australians have exposed to housing, and yet the wealth effect if the housing market starts to improve again.
Yeah, absolutely. It's that mortgage rate cliff that we keep waiting for. Hopefully, we don't end up sort of wily coyoting over the precipice, or we're not at that point right now. But anyway, just a note too, we do have US earnings tonight. Charles Schwab is on the cards, so going to be another big one.
Yeah.
Okay, so let's go and look at the leaders and laggards now. Danny,
Lake Resources. Yeah, they had some news out today, and I was just noticed that they have actually picked up another 6.5%. Oh, sorry, they've picked up their stake in the Kachi project. Lilac has up to 20%, so that led that one higher. And EML Payments is not on there, but there was some corporate news today about that restructuring. Apart from that, interesting, Star Entertainment, maybe that's finally finding some love after all the problems that they've had with the regulators.
Yeah, well, normally it would be on the laggards side of the board, it has to be said, over the last 12 months with all the regulatory issues that the casino has faced, but up 6% today. And again, I don't think that was necessarily on any news, not that I could see there. So we'll keep an eye out for that, because maybe that's a sign that, well, perhaps the bottom is in. We'll keep an eye out, obviously, over the coming days to see whether it follows through. Asana Mining up by 11.54%. And, well, the lithium names, we have to have at least one on the leaders and laggards a day. It's a volatile space, but nevertheless, that stock up by about 11.5%. Centuria Capital as well, up by 3.66%.
Yeah, following along with all the REITs that were a lot stronger today, which Adam explained. Expectations that we're not looking at too many more rate rises here in Australia.
Fingers crossed. Well, let's look at the laggards now, and I dare say there'll be a bit of gold on there, and some of those higher beta gold plays, I guess you could say, are pretty much dominating the list there. and you hold too.
Yep.
Coldplay.
And Regis basically had a downgrade. It's just worth noting that they updated guidance and they've got lower than expected gold output in the March quarter. So they kind of had a double whammy with the profit taking as well as that downgrade there. But yeah, very much all the laggards sitting really in that gold sector. Profit taking, which is no surprise given how much they've gone up recently.
Yeah, definitely. And we spoke about the macro factors too behind the little dip in the gold price that we got on Friday night. But I mean, I had several conversations actually today, Danny, with some folks about whether they'd be allocated in gold. And I mean, if you were invested in the ASX All Ordinaries Gold Index from the start of the year, you've seen double-digit returns. Now, obviously, you don't keep, well, most people don't keep 100% of their portfolio in gold. Some people do. I've met them, but still, it's a bit of a drop in the ocean when it has to be said when it's this pullback when it comes to the run-up we have seen in gold prices. So there are the laggards. It's a gold kind of a sell-off, and we'll quickly run through the small caps now because we always learn a few different names. And
there's EML. Absolutely, yes. I mean, poor EML shareholders. They've been very long suffering, but just worth noting that there is a new temporary or interim CEO, Kevin Murphy, who's taking over and replacing the former CEO, Emma Shand, who'd only actually been there for 10 months, and they're going to continue to cut costs. They're looking at restructuring the business. So I'm sure holders of that stock will be very happy to see that the activist investor that's now on the share register there is starting to make a difference.
Okay, so a big move there. Let's look at the laggards now.
AAMI, they also had a big earnings downgrade, worse than expected margin compression, and clearly, shareholders were not happy with that. So, yes, downgrade on that one.
Yeah, and actually we've seen a couple of cold plays coming through, and I always have to say cold, not cold play when I say that, because my horrendous Australian accent, makes the D's disappear sometimes there. But coal plays were actually generally weaker today too, and you can see, well, the company that I have just learnt of today, Tigers Realm Coal down 30%. Might have been on company specific news, but there was some coal weakness coming through there.
1 cent. It's really starting to not feel the love.
Yeah, well, there's only one way that one can go, buy the dip, eh? Not general advice only. Okay, so that is it. And, we have seen the CBO 200 finish 0.25% higher, I should say. And the ASX 200, in fact, finished around
should have that
about...
for you. That is up about 0.27% or 19.9 points to 7,381.5. So, yep, another up day. It's going to be an interesting week.
Absolutely.
Really interesting.
Yeah, huge. US earnings, macroeconomic data.
The big Tesla.
Tesla's coming up.
Yeah,
have,
Netflix.
Netflix is in there too. Yeah, the list goes on, and then you'll have a few Fed speakers who want to make their opinion known. Just make sure they get their head out there before they walk off into the sunset and get on the lucrative speaking circuit. That's what it's all about. So they'll, I'm sure, shake up the markets too, just like they did on Friday night. But Danny, with all that said, you reckon we wrap it up for another day?
Yes, absolutely.
Okay, well, remember, you can catch up on all the views and interviews and news on our website and app. Have a great night.
Cheers.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.